Hello, today is Saturday, November 12th, 2022. We always do our disclaimer first. We go over our calls, make some predictions, and since it's the weekend, we look at the long-term picture. It's my trading plan for Monday, which would be the 14th of the month. Please remember I can be completely wrong. If you want to risk money here, it's at your own risk. Look for the pattern with the early low, which is here. Monday, I'm looking for a pattern with the early high. We hit a target, 39.1356. We said unless we gapped up smartly, it should print. We gapped up smartly, so the number stays on the table, but not the time. We'll add this to the list. I always feel good when I take an old target off the list. 39.86.18 printed. So that gets crossed off. We also had a three-leg FOMC whipsaw target of 39.88, and that printed too. These are all resistance areas. Just because we printed the target, it doesn't mean we have to stop here. It's not a stop and reverse, it's a target, but at least that pattern, in spite of the detour we had, has played out. We have an optional target for tomorrow, not tomorrow, Monday, 39.7709. If we don't gap up, the odds strongly favor this printing. It's not required, and if it doesn't print Monday, we'll forget it. And don't forget, we still have this 39.1356 target that should print at some time, although the system doesn't say when. During the day, MEJT said higher prices were coming, and in spite of the detour, we certainly got them. In the afternoon, the buy signal worked. Even though the minimum target printed, we got more. There's an optional lower target that we undercut this line. That gives us Monday's optional target. It prints, shall we forget it? Here's the daily chart. Notice we're trading over the upper Bollinger Band. In general, that's not really a wonderful time to initiate long positions, and we tend not to stay there very long, even though it doesn't mean we have to drop on Monday. Well, here's a long-term chart. Gann liked to divide things into third. You take this major low, this major high, and 1/3 of the way down is pretty much where we closed. That might be kind of a stretch, I admit, but these fibs aren't. You can take this high, this low. 61.8% was right at this top, and Friday's high was right at the 38.2. So in spite of this strong move like this, you really have to at least consider the possibility that that resistance might hold, especially since we have this wall with a gap, and these things are not stable patterns, and we tend to undercut this low at some point, even though it doesn't have to be anytime soon. So let's look into the possibility this resistance could hold. Well, here's the pattern we have. We have this as an A and a B and a C, and C would equal A right at 4180. That's a number we've penciled in, but let's see if there's any chance this is gray C with a bracket. Let's focus in just on this last wave up. Well, if that's A and that's B, C is equal to exactly 61.8% of A. So in addition to the Fibonacci resistance we showed earlier, we have Fibonacci resistance here. If that works, there should be a way to count this move up. Well, I don't think it's a perfect count, but if that's 1 and that's 2 and that's 3 and that's 4, you've completed 5 waves up. And there's 1. 3 is equal to 61.8%. 5 is right at 38.2. You can't get better fibs than that. We've completed 5 waves up. Now 5 doesn't have to stop here. It doesn't have to be 0.382, but certainly if we don't overtake it, that's a pretty clear count to me. This was a day-long rally. Here was the close. We closed under a few midday highs. That's not good in this pattern, particularly on a Friday. And what also isn't good is we couldn't hit a new high of day in the final hour. We came close but couldn't do it. Now what counts isn't Friday's close but Monday's open. If we open up here, all this negativity goes away, but right now that's a negative pattern. The last couple hours of trading didn't make any progress in spite of the fact we were in a strong uptrend in the day, which tends to rally and tends to close near its high. These are the patterns I think we'll see next week. Monday's pattern has the early high. We could gap down, of course. There's an optional lower MEJT target. Unless we gap up smartly, it's highly likely to print, and if it doesn't, we'll just forget it. Friday's rally ran into resistance just over the 3980s where we thought it would. Now there's Fibonacci resistance and wave balance right at Friday's high. Failure of the day-long rally to make progress during the final hour of trading is bearish. Now time doesn't run out till early Monday. We gap up Monday, all that goes away. I don't know why that's showing up. Where am I? Unless we promptly overtake Friday's high, I think we'll see lower prices Monday even if we don't close lower. But if that counts right, we probably will close lower. Intermediate term, we may have completed an ABC up. I suspect it's just an ABC, just an A of a larger ABC a larger degree. I don't have anything saying the rally's over, even if we do drop Monday. And if the count's right, there could be a pretty big drop from here before it's done. Longer term strong rallies such as this week's have almost always been rallies in bear markets. And after this advance is completed, possibly around 4180, I think the low of year falls, probably not until 2023, but I think the low of year falls, and we could go as low as just over 2977. So we had this rally, stopped at resistance, couldn't clear the midday highs. This is not a stable break, this is a wall with gap. We tend to have support under this level, which is way down in the 3750s, I guess. Doesn't mean it has to print now or even anytime soon. But if that's the right count, we'll probably drop right from the open and have a sizable decline. And if it isn't the right count, we should overtake this high pretty soon. And we're not going to know that until Monday. But most of the time, 3977.09 is going to print if we don't gap up. So before we open Monday, we should get a pretty good indication of whether we've topped out here in the short term. And that's today's call.